Gerald Salenti. It's Wednesday, June 20th, 2018. And here are some of today's trends in the news. Remember yesterday, the global markets, boom, they were down. Today they're up. No surprise to you. We said so yesterday that this whole trade war, tariffs, it's not the big mover. Something else is. Matter of fact, a number of things are. And you have it today in your Trend Alert. Trend Alert. Trade wars won't sink markets. This will. That's right. And we detail what virtually no one else has put together in so many different perspectives. So, for example, this is the headline of the Toilette Paper Record, front page, New York Times. Global markets slump over fears of a trade war. Well, we see it differently. We're right, they're wrong. This is more hysteria, infactual reporting, and the inability to take a globalnomic perspective and looking at all the elements driving the markets up, down, and sideways. But you have it, and no one else does because you subscribe to the Trends Journal and you are reading right now history before it happens. So, all the markets are up today. Well, the CAC is down, Dow's down a little bit. NASDAQ hit a new high. Right? Gold, it's down. Oil is mixed. Bitcoin's up a little bit. And when we look at why the markets are up, again, this comes as no surprise to you. Stocks rose on Wednesday, boosted by deal-making activity. The NASDAQ Composite rose 1% and hit an all-time high as they're crying the markets are going to die. And you look at the facts, and the facts are what they are. And that is deal-making activity and, of course, record levels and record-level stock buybacks. Another day, another merger. PayPal to buy payments provider. $400 million deal. Keeps going on and on. You name the place, you name the country. Versant Technologies, Inc., backed by private equity firm. Backed by a private equity firm, and that's all this is. They are plantation owners of Slavelandia, and we, the little people, work for them. This didn't exist when I was a young man. There was no such term, no such scam going on. They sold us out in country after country. Equity firm Veritas Capital has agreed to acquire Cotaviti Holdings, Inc. for about $4.16 billion to create a data and analytics firm focused on healthcare. Yep, more mergers and give us more lousy healthcare. Anyway, that's what's driving the markets up. And again, what could drive them down? Again, your Trend Alert has it, and so too is a barely reported story today. Remember last week, the Goldman Sachs gangster over there, Mario Draghi, now the head of the European Central Bank. Yeah, remember he said, we're going to cut back on that quantitative easing that we have. You know, the scam that we have to buy corporate bonds and government bonds. We're going to end it by the end of the year. Well, guess what? Draghi is dragging it back. European Central Bank President Mario Draghi signaled Tuesday that the bank could delay plans announced just last week to end its giant bond buying program. It's a rotten, stinking, dirty scheme that's robbing the money from all the people to give to the big guys as they gain more and more dough. Oh, you don't believe me? Wealth of the world's millionaires tops $70 trillion for the first time, and it's expected to hit $100 trillion by 2025. That's right. The United States led the world's top 4 millionaire markets, which also included Japan, Germany, and China. Those with at least 30 million investment assets saw the growth the most, because all the wealth is going to the 1%, and Trump's tax cuts made that even better because the facts are there. Go to the Tax Policy Center. They show it. The 1% got 82%, and that's what we got. Anyway, moving on to gold. Gold prices are going down because the dollar is getting stronger. It's a very old story. I've been saying it over and over again. The higher the interest rates go, the less attractive gold becomes because it doesn't pay any interest and it's based in dollars. So if you live in Argentina or Brazil or take a trip to Turkey, go to Indonesia, pick your joint, pick your place. As the dollar gets stronger, the currencies keep going lower, so it even costs you more money to buy a commodity based in dollars. And gold is a big one of that. So again, read your trend alert. You'll see where all this is going. No one is putting it together like we are. Money back guaranteed. History before it happens. A perspective that you won't see anywhere else. And oil prices. They seesawed on Wednesday as the major markets awaited a meeting. They're meeting on Friday, the OPEC and non-OPEC, to see whether or not they're going to put more product online. End of story. Meanwhile, it's a mixed bag over there because in the United States, crude inventories fell by 5.9 million barrels, which is a lot, the week of June 15th. But offsetting that, gasoline stockpile rose by 3.3 million barrels, and inventories for distillate fuel, which includes diesel and home heating fuel, jumped by 2.7 million barrels. And they lost about 400 barrels in a storage tank blown up in Libya. You know, the wonderful Libyan war brought to you by the murderer Obama that all the liberals love, and slimy Sarkozy and little Cazzoni Cameroni over there, that little jerk from the UK, plus Hillary Clinton, Samantha Power, Susan Rice, and the rest. So anyway, the whole country is destroyed, bombed into ruins, and then you have the problems going on in Venezuela. So it's a supply and demand issue, which is going to catch up. But again, go back to what the ECB is saying. There's a slowdown happening. And we gave you the data last week also for what's going on in China. You're seeing some major slowdowns. So the bigger the slowdown, the less demand for the oil, and the more oil now, because of the United States, is going to shortly be the number one provider in the world, beating Russia. There's going to be more supply than demand. Will that push prices down? But again, take a globalnomic view. Look what's going on over there in the Middle East. Bombs away in Yemen. More rhetoric against Iran. And we'll keep going into that further and further, including Israel launching a strike a few days ago in Syria that killed an estimated 52 Syrian troops. Who did it is still up in the air, but the finger's pointing to Israel's. Point being, if war breaks out in the Middle East, watch oil prices skyrocket and kiss the global equity markets goodbye, because also I mentioned about emerging markets. The dollar's getting stronger, their currency's getting weaker. How much more it costs them to buy product that's dollar-based, like gold and oil. So all those oil-dependent countries and all those emerging market countries are going to have to shell out a lot more dough at a time when things are slowing down, and that, we believe, will crash the market. And moving on to some other news, talking about the dollar, Trump's tax cuts, and him allowing companies to repatriate all that dough overseas. That dough was in different currencies. Now it's in dollars, boosting the dollar up. We've been saying this. Now here's a story to confirm it in today's Financial Times. U.S. tax reform said to drain more dollars globally. You got it. So, between the tax cuts that are bringing home the money, between the markets being boosted with that money, between mergers and acquisition activities, between the Federal Reserve, and that's another issue that was discussed today as to why the dollar got stronger, because Treasury yields rose after the Federal Reserve chairman said the U.S. Central Bank would continue with a gradual pace of interest rate increases. So let's put it together. Gradual pace of interest rate increases as the European Central Bank says they're going to keep that quantitative easing going because things are slowing down. So the euro goes lower. Oh, and by the way, we're not going to raise interest rates in the ECB maybe until sometime late in 2019. So keep putting the picture together. And what else do we have here? Again, the U.S., things are doing okay and the people feel better. Satisfaction with U.S. direction reaches 12-year high. 38% of Americans are satisfied with the way things are going in the United States. Similar to last month's 37% satisfaction rate, but making the numerical high since a 39% reading in September of 2005. But then you take another look at it, and things are getting better, but how much better? Well, if you read the headlines, it sounds like a lot better. Millennials moving out of mom and dad's place, study shows. It is a real big drop. You know how many millennials, according to the study, were living with mommy and daddy in 2016? 32%. You know how many last year? 31.5%. How about that being a statistical error that means nothing? And 2017 study by the Federal Reserve shows millennials earned an average of $40,581 in 2013. That's the last data they have. It's the Federal Reserve, so things take time. That's 20% less than inflation-adjusted $50,910 earned by baby boomers in 1989. So things are getting worse because U.S. existing home sales fell in May. The booming economy is providing little boost to critical spring home buying season, which is stuck in neutral due to a lack of inventory because it really costs a lot to build cheap homes and people don't have money to buy the higher middle class and middle class homes, and rising interest rates. So it looks like the millennials are going to be staying home for a while. But to show why you have to read behind the headlines, breaking news, weekly mortgage applications jump 5.1%. Interest rate volatility has dissuaded borrowers for months, but some returned to the mortgage market last week. Mortgage application volume increased 5.1% from the previous week. That sounds pretty good, doesn't it? Well, here we go. The gain was driven by applications to refinance a home, which rose 6% for the week, but was still 31% lower than a year ago when interest rates were lower. So, that's what we got. And just quickly, on some other news, Trump finally said what I've been saying he should do for quite a while now. Trump signs order that he says will keep migrant families together. And again, I'm all in favor of closing the borders. We can't take on new people till this economy comes back, is the way I feel. And you know you have your right to think for yourself. But taking the kids away, little kids away from parents, that's a trauma that a little kid will live with for who knows how long. So I think that's a very smart move. And just briefly on what's going on in Yemen, battle intensifies for Yemen port. Saudi allies attack key Yemen aid port. French special forces on the ground in Yemen. And the U.S. is all part of it. But that's not making the news. Hey, how about Stormy Daniels' attorney? I wonder what he's doing today. This is Gerald Salenti.